Great, and we're live. Everybody, welcome back to Digital Asset News, or as we like to call it, live DCA with friends of the show, Ben from Into the Cryptoverse and James from Invest Answers. Gents, thanks for coming back yet again.
Thanks for having us.
Oh, yeah. This is going to be good. I'm going to tell you right now. So we're going to go over a bunch of stuff, first of all. We're going to talk about the ETH merge lessons, buy the rumor, sell the news, and what's going on behind the scenes. Also, we're going to talk about the macro, as I think it's pretty much hard to escape. And the big question is, are we on track for deflation, and how dangerous is that? James is going to answer that one from his buddy Elon Musk. Also, let's talk about follow the money, because I don't know where the money's going, but it sure as heck isn't in traditional markets or crypto. Lastly, is now the best time to sell before it gets worse, and should we be shorting? And then lastly, excuse me, did I miss anything? Are there some bullish undertones that I didn't think about? Is the Fed going to wake up? Is there going to be a ceasefire in Ukraine? Long-term outlook and timeline. So let's jump into it. And before we get started, of course, James's channel and Ben's channel, the link's in the description. Also, you can find James over at Patreon, and Ben's got a great website, Into the Cryptoverse, which I steal from all the time. So first questions first. ETH merge lessons. Buy the rumor, sell the news. And we can just see right here. Obviously, you guys have both done a couple of videos on it. They've been fantastic. Thank you so much. And over the last 24 hours, not too great. 7 days is even worse. And then if we take a look at Sound Money, is deflation really going on here? And as we take a look at the supply since the merge, it's actually gone up. And then also decentralization versus centralization. The key metrics, exchange outflows, we can see that our inflows into exchanges, Bitcoin's at plus 756, and the inflows for Ethereum is plus 1.2 billion. We can see that even clearer here on the crypto quant chart. So where does ETH go from here? Where are we going in the short term? Ben, let's start with you, my man.
Well, you know my general opinion on it. The last two videos I put out on Ethereum, one right before the merge, one after the merge. And really my general outlook is that it was a huge buy the rumor, sell the news event. And I kept thinking to myself and telling people, you know, if like all of the eyeballs in crypto were on Ethereum at the merge. So it's like whoever's going to buy it has probably already bought it. You think back to 2021, like Bitcoin and stock to flow, like, you know, it was a very big hyped up moment. Once everyone starts watching something, it kind of makes you wonder who's gonna keep buying it after we get this major event. So my general outlook for Ethereum's valuation has not really changed. I think that the Ethereum Bitcoin valuation, I believe it just put in a lower low, and it looks very similar to me as the Bitcoin USD second distribution phase in 2021.
Yeah, I remember that.
So we had Wyckoff distribution for Bitcoin USD in 2021. We had the same thing for Ether Bitcoin that finalized early this year. And then in the second half of 2021, we had Bitcoin, a secondary distribution phase. And then I think we just had the same exact thing on the Ether Bitcoin pair. And what's interesting is the Ethereum dominance is it basically peaked at the same level it peaked at during sort of like the dead cat bounce back in 2018. The Bitcoin dominance is sort of bottoming at the same level it bottomed out in 2018. I know everyone thinks this time is different, but you know, when you look at the macro headwinds that we're facing right now and regulatory concerns, especially regulatory concerns, and then also, I mean, with regards to Ethereum, I mean, I will continue to say that I'm a huge macro bull on it, but I'm not gonna just blindly say it's gonna go up when we're in a bear market. So my general outlook is that, you know, I think that there's not a great chance the Ethereum Bitcoin valuation is going to be going higher anytime soon. I think it's more likely to go down. And Ether USD, I mean, look, we have our regression band down below. That's where we, as I've said before, right, in the bull market, or from the regression band, the bull market is born, but in the bear, we shall return. And currently, the fair value of ETH, according to the regression, is at like, you know, $650 or something. So my general thoughts are that it's a fairly bearish outlook for Ethereum over the next like 3 to 6 months. Same with Ether USD and Ether Bitcoin. And just to briefly touch on your deflation, or the deflation thing that you mentioned.
Right.
Look, I don't think that Ethereum will be truly deflationary until after we get back to a bull market, because remember, the more network activity, the more ETH that will be burned. But right now, no one cares about crypto. You know, no one really cares about it. No one's really using it, and so right now, I think the deflation narrative is sort of dead upon arrival. But in the next bull market, once we're cooking again, I think you'll see that narrative play out. and Ethereum will go soaring once again.
Well, shoot, that makes sense. I like that. Build the bear scenario. And then, hey, I got to tell you, if $600 comes into play for Ethereum, I'm all about it. James, what do you think, man?
Yeah, well, it kind of goes as well. Everything that Ben said, I completely agree with. And what people are doing is, everybody's front running the sell the news thing. Everybody's kind of expecting that. With pre-run happened, it topped out a week or 10 days ago, and then started selling off. But the big problems remain, and I've said this 100 times. One, Ethereum 2.0 post-merge, whatever you want to call it, it ain't fixed. It's still slow as heck. Gas fees aren't going to drop. There are definitely some huge centralization problems right now, which we can go into without being too political. But the two-node issue is a problem. And also people are kind of shanghaied for 12 months. Validators, it's not easy for them to unload. So they're kind of locked in. So a lot of interesting stuff is happening, but would you like to talk a bit about the big concern right now? I think the big story is Gary Gensler. Right after the merge, he comes out and immediately there's a target on the back of Ethereum. When he said on Thursday, staked cryptocurrencies, I think, were the effect of maybe subject to federal securities regulations.
Right.
We're beating a pro-oversight stance in the wake of this big merge, which is kind of funny. And proof-of-stake blockchains generate new coins for inventors who pool their holdings, take on investment. Also, the big concern with the massive concentration. Two nodes between, I think it's Bitcoin Swiss and Binance, have 56% of control. So imagine the situation where a government was unfriendly and, do what they did with Tornado Cash. Theoretically, it's possible to shut down the network. Just thinking out loud. So that is a big concern as well for people. Not raising alarm bells here or anything, but definitely an issue for the chain right now.
No, it makes a lot of sense. And I was thinking about this too, because they were talking about shutting down DEXs. I'm like, can they really do that? And they said, yeah, Rob, of course they can do that. They did the same thing with everything that was tainted with Tornado Cash, the touch Tornado Cash, went to the outflows. And then once that happens, they just shut them down and go, no, sorry. So
they connect to tissue, like the DEXs that run on ETH, they can say, well, you got to shut down ETH because you got to shut down the DEX. Game over. And that is a huge concern. I don't think they'll be that drastic, but with the Fed coin stuff burgling up as well in 2023, there's some weird stuff going on right now.
Yeah, and you know what? Behind the scenes, guys, we were talking about adding in this one section about Coinbase adding in a little piece to their app where they would allow you to go and to take a look at the different politicians and who is positive or negative for crypto. I got to tell you, what James just talked about doesn't make a lot of sense. If we don't be a part of the discussion, they'll run the discussion, and then before you know it, Gensler gets his way. He oversees everything. The CFTC gets what? Bitcoin. That's it. So not a good plan. All right, second one, and this is, I think, the big issue. And this is what Ben was talking about on both of his videos about Ethereum. You can't escape macro. That's one of the big things. And there's different problems that are going on. We've seen a cooling of the housing market. But I don't know if it's that big of a cooling. This is from Redfin, one of the largest realtors in the entire world, just about. And if you take a look at the median sales price over a year, there's a little bit of a cool down, but not much. Over 3 years, if we take a look at it, it's still looking pretty darn good. And then over 5 years, even more so. Number of homes sold over a year, yes, we're a little bit down, but over 3 years, roughly the same. And of course, there's another article which talks about average home sale prices decreasing, average and median. Just depends on how you want to dash that up or break that up. Inflation has increased just a touch, as we can see here on Trueflation. Also, the CPI numbers came out. Fed's going to come out next week, starting 2021. They're going to talk about the rates. I think it's going to be 75 basis points. Some people think it's going to be 50. Some people think it's going to be 100. I don't know. And then, of course, the big question then, I'm going to start with you, James, about this. Deflation. Is this the risk that we're having? Because really it just comes down to a race to the bottom. Demand goes down, unemployment goes up, prices go down, and then you got these low asset prices, but bank failures, credit freezes, and so on and so forth. And this actually goes to a tweet that your buddy Elon put out. Elon warns against Fed, says deflation incoming soon, warning signs need to settle North Secret. A major rate hike risks deflation. James, where are we at here?
Yeah, well, the tweet you just listed there spelled it out real clear as I wrote it, but I don't want to repeat myself. But if you look at the deflation in the pipeline. I
Yeah.
mean, with the exception of maybe some food elements and some owner's equivalent rent, lumber's down 60%, copper down 35%, oil down 35 to 40%, iron ore 60%. Everything is so far off its highs. Baltic freight rates, I think, are down 80%. Gold is tanking. It's down nearly 20%. Silver down 40%. So we are definitely seeing massive amounts of deflation. Obviously, when things spike up, things mean revert. And that brings things down fast. And the big problem really is the consequences of deflation can be devastating because it catches everybody off guard. Those with debt go underwater. That works for both people with real estate. Imagine you've got $1 million mortgage and your house is worth 1.2 million. Now it's worth 800,000. That was a big part of the 2008 financial crisis. Now, the numbers you showed for real estate, I track real estate very, very closely. This industry has ground to a halt all over the world at the same time. Those things that you're looking at do not reflect the true story. I mean, take the refi market, dead. New financings, houses are on the market now for 90 days instead of selling within a week before a few quarter ago or so. Anyway, the deflation consequences are devastating. As consumption tanks, companies can't sell products nor reinvest. Everything just gets really bad really fast. And the Fed is hopefully going to be aware of this. I did a video in July 2021 that expected deflation, but for it to be very short-lived, because the Fed will have to get us out of that. But they don't want that either. That just smashes everything. And the other problem we have is the strong dollar is also smashing emerging markets around the world, which also drags the whole planet down, which is not good on top of all the other issues that the planet has right now today. So
yeah, well, that's true.
A major Fed hike. I mean, everything I look at, credit markets, they are teetering. And I've been talking about this for a long time. Yeah, they can go to a Fed funds rate of 4.5%. But by that time, everything's destroyed. That's just my take. And I think they're smarter than that. They know. And they've got 300 PhDs on staff. Hopefully, fingers crossed, smarter heads will prevail within the government. I could be wrong. I just look at numbers and what I would do if I was in their seat.
I got you. Oh, I got you, man. I just never underestimate the power of groupthink. That's what I'll say. And so real quick, Ben, you're always tracking this, the Dixie, the strength of the dollar and things like that. Where are we at here?
Yeah, I mean, it looks like it wants to move higher. There was actually a period, if you go back like a couple decades ago, there was a period where the Dixie went down and equities went down with it. So just because it goes down doesn't mean that equities can't go down with it. We've been in a period of the last 20 years or so where that hasn't happened. Usually when the dollar's going up, equities are going down. When the dollar's going down, equities are going the reverse way. I still, my thinking, I know James is thinking that that they should pivot at 3.5 or so for the Fed funds rate.
Yeah.
I actually don't agree with that. I think it makes more sense for them to keep raising it. And the reason I say that is because I look at what happened in prior inflationary decades, and I worry that if they pivot too soon, it's just going to make inflation come back multiple times over the span of 5 to 10 years, where they cut back, they pivot, and then we just have inflation come right back. And look what happened in prior inflationary decades, where that's exactly what happened. I think Powell's been pretty clear. He's quoted Volcker a couple times. I don't think he wants to go down as the next Burns. He wants to actually get inflation under control. And I don't think you can do that by stopping at 3.5%. Not in a very quick manner, right?
Sure.
So, and by the way, I think the markets agree with me. And if you go to if you look at rate hike probabilities that are being priced in right now, not only is 75 basis points being priced in or predicted for this next meeting, but I believe they're also predicting another 75 basis point rate hike in November right now. So I mean, that's an extra 150 basis points just over the next two meetings. So if we get that, which is what the market thinks, we're already at 4%, and that's before the December meeting. So I think the most likely path for the rest of the year is that the Fed funds rate will probably end the year somewhere between 4 to 4.5% is what I think. I could even, I mean, like, it's never been my base case, but I've said before, I think that it'll peak between 4 to 5, but it also is going to be, as they say, data dependent. If inflation continues to go up, I don't think they will shy away from going to even 5%. We can call it financial Armageddon. We can call it a bear market. We can call it whatever the hell we want to. But at the end of the day, if core CPI is moving higher, I think they care a lot more about that than our portfolios. I just do.
But the point is they don't care about our portfolios. The point is they themselves have a huge debt bag. So every time they increase interest,
yeah, but their debt is denominated in a currency that they freely print.
Exactly. Yeah.
Which would lead to more. So to me, I always look at it like this. Isn't it like making a drink too strong? Like, wow, this is too much vodka in this. Let me put a little more seltzer in there, and then kind of balance it out with money printing and pulling things back. Is that, because that's how I kind of see them kind of working. I think Ben's right. They're going to take some data dependent. Hopefully they use the right data, not the retro data. And then James is right. I mean, there's only so much debt we can go to, and when deflation comes along, time to put on the money prints.
There are benefits to them raising rates. I mean, I know we all like to take on risk and we like to go buy risky assets, but you can go buy like a CD or something. You can go buy a 2-year and get 4% APY. And I know a lot of people might scoff at 4% or something, but it's better than losing % on altcoins, right? So, there are advantages to higher interest rates. Like, money market accounts, you might see them start giving out 4%. I haven't even seen that really in my lifetime. But this is what like my parents saw when they were growing up. They saw these higher interest rates. So there are some advantages to that sort of stuff, because you can get like risk-free, right? Where I'm not saying you should have your entire portfolio or even a majority of your portfolio, but it can provide some security during a bear market. You're just like a fixed income type thing.
Gotcha.
And historical debasement is 14%. So Saifedean would say, if you're not making well, he doesn't say it. I twisted his words, but if you're not making 14%, you're not treading water, you're sinking. So,
right, but if the alternative is to just watch it go down in crypto or the stock market, I mean, what are you going to do?
What are you going to do? And so this lead to the next thing, right? Because my question is this: where's this money going? Because it's not going into traditional finance. We can take a look. I mean, just the basics. The S&P 500. If we take a look at just today, 1.4. 5 days, 5.6. 1 month, 10% down. 6 months, 12% down. 1 year, 13%. In 5 years, hey, you're up 54%. That's a long time. And of course, NASDAQ is the same exact thing. And then we already know what's going on with our market. So, James, I'm going to start with you. Where's the cash? Where's the money? Where's this going?
Well, it's in that a lot of people have short-term T-bills, simply straight cash and money market accounts, etc. There's over $3 trillion on the sidelines. There's also billions draining out of European markets and emerging markets, and flooding into, well, parked somewhere. I don't know where all the money flow is, but they're definitely leaving equities in the European markets right now to find a new home. So we'll see. I mean, it's hard to say, but there are a lot of people still waiting to deploy right now. When that deployment happens is a function of that big lid on the jar of cash, which is the Fed. They want to see them changing direction.
Sorry. Do you think everybody's just waiting, just kind of looking to see what happens and going, okay, we got trillions of dollars, hundreds of billions of dollars. Now we're going to deploy.
So the deployment ratio right now, like if you consider a -200 to a +200, I think it's called the TMC, it's at about 12 to 16%, which means most asset managers, based on a survey, are sitting on a large proportion of cash. They're not invested in the market right now. So again, it all goes back to, I did an interview yesterday with Larry Williams, and it all goes back to when, the market stops going down when people stop selling. The question is, how close are we to that point?
Yeah, good question. Which I guess, so Ben, I mean, same thing here. Where do you think things are flowing to? And then this is something that me, Ben, and James talked about before, which is, I think when Ben says cash is king, remember it's dollars is king, not so much like euros or something like that. But Ben, same thing here or something different?
Yeah, I mean, I can speak for myself and say that, I spent a lot of this year just like stacking cash. I have missed out on a lot of bear market rallies for sure. But I also just sort of admit to myself that I'm not really that skilled at trading those types of things. So I'm sort of just okay missing out on them with the general expectation that like I might miss out on the counter trend rallies, but I'm still getting right the more major trend of down. So yeah, for me, it's just basically been I've just been stack. I think cash is king this year, and more specifically, as you duly noted, and I often forget to note that it really means the U.S. dollar.
Yeah.
I've had a lot of people that they were stacking euros, and not only, I mean, their purchasing power has gone down even with respect to the U.S. dollar. So that's hit a lot of people pretty hard. So yeah, I mean, cash remains king, I think, for at least a few more months. And I do think that I think if you look at history, a lot of times the stock market will bottom about 2/3 of the way into the recession.
Yeah.
And arguably, we're already almost 3/4 into a recession, like like Q1, Q2, and now we're almost through Q3. Let's assume that this recession could last out until like mid to late 2023 potentially.
Sure.
Then like we could be seeing a bottom on risk markets here in the next like three to 6 months. I mean, it could come as early as the end of this year, or maybe we could. I mean, if you go back to even Bitcoin's prior bear markets, we had one that didn't even bottom until Q1 of the following year, back in 2015 after the 2014 bear market. So I think cash remains king. That's where most of the money's going. I mean, you can hedge with other things like, there's precious metals. I mean, actually, the energy sector has done pretty well. I think a lot of money has.
Everybody.
In the energy sector. I'm not necessarily saying that it's like the best play at the moment, but I don't know. I mean, I know a lot of people are calling for like a commodity super cycle. Which I mean, we know where super cycles generally end up. But yeah, I think really if you can just stack cash and be patient, you're going to really appreciate yourself for doing so next year.
Okay, this kind of goes into the next question, and Ben, I'm gonna start with you. But you pretty much already said it. But you kind of said it, but I just want to question this: is now the time to sell before it gets worse? Because you were talking about Ethereum going down to $600, and I think there's some other videos you've done where you think that it could go down as far as the total market cap decrease from there. Is there any other options? Should we just sit and wait? Should we be shorting?
I'm not offering any financial advice here.
Good choice.
I will say that I became bearish on this market with you, in fact, back in Q1. And I mean, we were on this show talking about how it looks pretty bearish, and it took me a little bit into Q1 to really commit to that stance. Like I was sort of on like kind of going back and forth on what I really thought, but after putting in higher lows and especially with the rejection off the 200-day at 48K, like I'd basically seen all I really needed to see to sort of. So I mean, I think really the time for me to sell was back then.
Yeah.
I do think that, and I've been preaching this for a long time, and so far it hasn't happened. But I do think that alts need to go down a lot, not only with respect to the US dollar, but with respect to Bitcoin as well. And I think that the narrative that will fuel that will be the regulatory concerns for the altcoin market. Right. We have to consider this, that if altcoins are deemed securities, that's not necessarily a bad thing. We trade stocks all the time, right? And stocks are securities. But the problem is that there might be, I mean, I'm not trying to just spread FUD, right? But in the United States, there might be some questionable things related to, can U.S. exchanges list these things list them? Think back to when the SEC filed a lawsuit against Ripple. A lot of exchanges were delisting Ripple or XRP in the United States, right? They were temporarily delisting it. And what if that is like tip of the iceberg as to what is about to happen in the altcoin market? So I just want people to think about, if there are regulatory concerns coming, those regulatory concerns from that perspective aren't going to affect Bitcoin. Now the ban, if there's proof of work FUD, that could theoretically affect it. But the regulation on on things like proof of stake or just in general, like, are these things securities if they had ICOs, that kind of stuff. Like that kind of stuff, I think can really cause a lot of fear very, very quickly and lead to the next leg down in the altcoin market, and more specifically like the alt Bitcoin pairs where it goes back to Bitcoin. I know everyone says that Bitcoin's done and that its dominance is never coming back. I heard the same thing 4 years ago, like the exact same thing I heard 4 years ago, and it went back up. So either this time is different or we're just setting up for the same exact thing that we saw last bear market.
Yeah, perfect. And James, I'll get to you. I will say this about the Ripple thing, is that if the exchanges, they say, hey, we can't list anything that's a potential security, that's the whole market. Then every exchange will just do Bitcoin. That'll be it. But there is one thing that makes me think now what a genius move it was for Sam Bankman-Fried to put a bunch of money into Robinhood. Well, now it makes sense, because he's like, well, if exchanges go down, I can't only list so much crypto. At least I have my hand into this one, which is equities, and I can figure out how to do everything with securities. That makes a lot of sense to me. And also, if anybody doesn't know, as I understand it, there's a leak that just came out that said that FTX is the leading bidder for the auction of Voyager. So we'll see if that actually works out. So James, this is your wheelhouse, man. Is it time to sell? And should we be shorting? I think that'd be the bigger question.
Yeah, people are just so bearish and they're sitting on the sidelines. But if you just take a simple chart, and as you guys know, I trade wherever there's money. But 90 days ago was the 16th of June, and since then Tesla's gone up 43%. Okay, so what I would advise people is, if you're just obsessed with crypto, things move in cycles. Crypto had all its teeth kicked in, and then it was stabbed in the stomach, and then somebody cut one of the Achilles. I mean,
it's bad.
It has been really ugly. And now we got the regulatory cloud hanging over it and everything else. But chase alpha. It doesn't matter where it comes from. You can even scalp crypto, because one of the beauties of crypto is it's very volatile. So it has these very predefined ranges, and trades 24/7. So if you're stuck in a full-time job, sometimes a lot of action happens at 8, 9 o'clock at night, my time. But again, there is always, I don't want to quote Jim Cramer, but there's always to be money to be made somewhere. It sounds really cliche. And that's what I'd say. But just, looking at the market with a big lens saying, yeah, it's death and destruction, we're all going to die. No, that's not how you don't sit out and wait for things to turn around. It's always been my opinion, because by the time you see things turning around or you hear the sentiment change, it's too late. The train has left. Like, as I mentioned, 90 days, 43% Tesla. A lot of other things are way up off the floor. Look at Ethereum, even though it's down around close to the kill zone. That I believe, that's been so volatile from the bottom of 900 straight up to nearly 2000 back to nearly 1400. There's a lot of volatility that can be played here. So again, just understand the cycles and the movements, understand what's hot, what's not, and follow the money. Keep a close eye on where things are.
Yeah. And those are all good points. And you know what you said about, when things shift, it's already too late. That's why I watch both of you guys, and especially with what Ben was talking about, I was like, look, if we take a look at the history and where things could go, ETH $600 is not out of the question. And it just goes to show you that there's a lot of good information out there. You just got to look for it. And before we get to the last one, I just want to ask everybody who is in the video, first of all, thanks for stopping by. We do appreciate it. If you could start to answer your questions in the chat, then I'll pick them up after this last question and we can roll from there and get out of here early. So the last question, and James, since you're up, I'll start with you, because let's be honest, it's a bullish question. Bullish undertones. Did we miss anything? The midterm potential election bump. Maybe the Fed wakes up and says, wow, we're smart. We totally messed this up. Maybe like a ceasefire in Ukraine. Then also for everybody, there's a link in the description. This is the midterm election year stock market performance since 1962. And you're going to see right here in the middle part, before the midterm S&P 500, and then 3 months, 6 months, and 12 months. Even in Nixon's day, it went from -14 to 13, -30 to 20. Jimmy Carter, Ronald Reagan crushed it. I think the only one that did kind of bad was, of course, Barack Obama when the 2008 financial crisis. But James, what did I miss? What did we miss here for the bullish undertones themselves?
Yeah, it's an interesting question. There's a lot of ways. I'm just going to answer it the way I feel. Sometimes,
Sure.
if you talk about certain things like you mentioned Ukraine, potential ceasefire, I track that very carefully. There's a lot of cracks that are appearing in the trust of Putin. A lot of dissidents are popping up everywhere in Russia. There's a guy on CNN from St. Petersburg. I don't watch CNN, but somebody shared it with me. Like this is stuff that is unheard of. You have Gary Kasparov, your buddy there, Ben, out there, very, very, open, openly criticizing Putin. Back in the day, he'd be stung with one of those little umbrellas, but not anymore. I think there's a lot of cracks, and also the Russian army's on the back foot. And then I'll hear all these Russian people say, "No, they're not. They're still strong." But no, it looks really, really bad. The Ukrainian method of warfare is really effective, really working. I don't think the Russian soldiers have the heart. So from that perspective, that's good. Energy supplies are beefing up in Europe. That's good. Xi is questioning Putin. That is good. Recession is here. The FedEx news yesterday, like clearly FedEx are kind of like the canary in the mine because they have the finger on the pulse of exactly how much stuff is being shipped around. And that's an early warning indicator. Yes, we're definitely in a recession. But a lot of this bad news is factored in. So it doesn't take a lot of good news to turn things around. And from that perspective, Q4 historically is always a good quarter. Again, we're close to the bottom. We hit the bottom, I think, June 16th. We're kind of halfway between the bear market rally and the bottom right now for many, many assets and factors. Some are just bumping up against tops, like I mentioned, Tesla and others. So I think it's always darkest before the dawn. We have all the darkness right now. I think a few rays of sunshine will only help things. And I'm talking from a equity market perspective mostly. There's still a lot of unknowns with crypto. But, you got people like Sam Bankman-Fried plugging the holes, as you just mentioned, trying to keep liquidity because he knows he's invested billions in the space. He doesn't want the whole thing to blow up. That's why he spends a lot of time in DC as well, lobbying, and lobbying works. Politicians like those little brown envelopes.
What? No way. Yeah, that's crazy. All right. Perfect one. Ben, what do we got here? And did I miss something bullish?
I don't think you missed anything. It's pretty gloomy.
That's right. It is.
I mean, it's not exactly down only. You do get bear market rallies. The bear market rallies are the few rays of sunshine that I guess come through the clouds, but still a lot of clouds. I from a fundamental perspective, it would seem like the market is, especially the crypto market, will have another leg down. Now, if everyone always did what was the most obvious, I'm sure it would not always work out. So yes, there does exist a chance that the bottom is in, and we're only going to rally from here. I think it makes more sense to put a much heavier probability on more downside, though. Even though there's always a chance anything could happen, right? I mean, the Fed could pivot tomorrow and we kick the can on inflation down the road for someone else to deal with in a few years. But if he does what he says he's going to do, and if he does what I think he's going to do, and if crypto basically follows the same bear market path that it has always followed in 2014 and 2018, when we didn't even have recession concerns, really, not to the same degree, we did not have the same issues that we have today, then there's a likely chance of another leg down. And I think investors should be preparing for that. I think it makes more sense to prepare for that than to prepare for, some ill-advised, I don't know, just some rally, right? I'm not saying it can't happen, and I'm not saying I don't have any crypto. I do have some, but I still think cash remains king. And once we get through sort of what I would consider to be another leg down, then we can start talking about if that's the bottom. Okay, because I think the question, for me, the question really isn't is 17.5 the bottom, although there's always a chance that it could be, right? Like, I'm not going to say that anything is impossible. I think the bigger question that's going to divide most investors in crypto is the next bottom the bottom? Because the next bottom will actually be more in line with what most people would expect for a crypto bear market to look like, in terms of taking about a year from the peak, seeing a certain percentage draw down from the all-time high. The next bottom will be at that range. And at that range, all of the indicators will have flashed, because right now, like, I think like 65% or so, maybe, or something like that, of the indicators already say, you know, there's a good chance the bottom's in. Another leg down, you're essentially going to have all of the indicators from Bitcoin's history saying that the bottom is in. Like, if Bitcoin goes to like 13K or something like that, all the indicators are going to say the bottom's in. And I think that is going to be the bigger question that we have to ask ourselves. Is that the actual bottom? And because there's going to be a lot of evidence for it to be the bottom. The only concern at that point, I think, will just be how bad does the recession get? And does the recession merit a lower low beyond that? I think will be the big question we ask ourselves in a couple months.
Well, it's like you say. I mean, we've never gone through this. 2014, 2018, we didn't go through recession. And of course, there wasn't so much debt as much as there is now. So I got 3 things for you. First of all, where do I get that shirt, Ben? What's a few trillion among friends? That's a good shirt, I must admit.
My website, or store.intothecryptoverse.com.
Oh, you shill. All right. And then also, so
Don't worry.
Ben,
Don't worry. I've only lost money on merchandise since I launched. I'm paying some warehouse in Kansas.
perfect. So Ben and James, I mean, they did paint a somewhat bleak picture, but in the long term, I think it's going to be good. And just remember, we did talk about recession quite a bit, but how long do recessions last, right? 18 months, roughly around there. And then in between these gaps right here, you can see there's a lot of economic growth. So the question I have for everybody really is this, and then we'll get into the questions, is this such a bad thing if we do bottom out? What if Bitcoin really does go to 16K or 13, whatever else it is, and Ethereum does go below 600, around that? Is that the worst case scenario if you could actually accumulate for 2 years? And we talk a lot about accumulation. And I do that a lot on my channel too, dollar cost average and so on and so forth. I'm not a diamond hands person. I think that's dumb. Moving forward, as we get into more of the bullish tones, I would like to talk more on my channel, not these guys, they can do what they want to do, but about selling. Because I think that's some of the missing parts we forget, because people were so hesitant to talk about it. But it has to be done, I think. That's just me and my opinions. All right, guys, that was great. And that concludes everything for the news and everything we did. Let's do a little Q&A and get the heck out of here. And there was a lot of Q&A. I was starring them behind the scenes so we can get them going. Crypto Golfer, 10 watching, 8 likes. I think that was the original one. That's okay. This one, Rip Crypto. Okay. Beardy, When Ramen Noodles. I'm short ETH. Big buys. This is big buys ahead. DCA when the DJI goes below 19.5. You don't really know about that.
Dow Jones Industrial.
Industrial Dow. Yeah. Here's one.
Yeah, that's a big haircut.
That's a huge bear cut. Ben is awesome. Investments is awesome. Hey James, you're the best. Okay, I just want to pump everybody's ego. Okay, here goes the questions. What do you think of inflation being 10%? Is that possible?
No, we're past peak inflation. We're way past peak inflation.
Okay, so that
doesn't mean it's not going to be sticky on the way down. We're already seeing that. It is declining. It's not declining as fast as it went up. That's the issue. So there is some stickiness, but we're way past Mr. Cho peak inflation. Yeah,
Jiang Cho always has good questions. How about, is oil a major part of inflation? I mean, I think in America, we're running off some reserves. We're pumping that out. But what happens in the long term, especially this winter, especially for the European countries? Can we see that take off, especially in the UK?
Well, you got some of the big Wall Street centers that are kind of heavy oil. They're predicting $160 oil. But right now, I think it'll gravitate, between $160. $60 is kind of like the floor level for oil, I think, in this day and age. Right now, it's way down off the 120, down low 80s. So I think we'll see. It all depends really on what OPEC does, how much they produce, and where the Russian oil actually goes, and what the U.S. does. If the U.S. have to take their reserves back to where they were, that's going to cause a lot of buying. But I think I read somewhere during the week that they were looking to buy at their price target. They got a limit order in at $80 a barrel. But with that type of volume that they need to purchase, that will spike the price a bit. So I think we might bounce back to $100, but it'll be short-lived.
Yeah, makes sense. Okay. Ben, this is for you, my man. What's the derivative of your logarithmic regression function. I don't know if you got that.
I mean, I don't have it handy, no.
Okay.
I mean, I guess I could plot it. Maybe I'll try to plot it for the next one or something. But I don't have it handy right now. I mean, the equation is just y equals like 10 raised to the power a times ln of x minus b, where a and b are fitted coefficients. So I mean, you can take the derivative of that and get it.
There's your answer. All right. How about this one? Thoughts on the 20-week SMA across the 200-week SMA?
Where's the 20-week right now? Like 24K, and the 200-week is at 23. Yeah, well, I'd have to go take a look at it. I don't know exactly where they are. Yeah, I mean, they're getting pretty close. So yeah, I mean, it'll happen for sure. I think what's throwing a lot of people off this cycle are the moving averages, and I think the reason is because we had a double peak cycle. We sort of like we basically had a 6-month period where instead of coming straight back down like we normally do, and the moving averages make more sense, we went back up for a few months. So like if we had just come down last summer, like in summer of 2021, the 200-week was at like 14K back then. Like that would have made more sense, right? But instead we leveraged ourselves to 69K, and we kicked the can down the road half a year. So I think the moving average indicators are starting to break down a little bit. We've never seen the 20-week cross the 200-week, have we? I don't remember that ever being a thing. I don't think they've ever. It looks they've never actually crossed before. Huh. So I think this is the issue, is that you're seeing. We basically had a double peak cycle where. Like the moving
April
average
and November.
Yeah, basically the moving averages were allowed to get a lot higher than they would have in any prior bull market. When once you had that first major peak, you typically just went down after that in relatively short order. Like you didn't continue going up or staying at that upper range for a year.
I got to tell you, this was a very odd cycle. I mean, from what it was before. Hopefully, it plays out a little better next one. We'll see.
Are you both saying this time is different?
Well, I mean,
maybe perhaps so.
You can look at the chart and see that 20-week has never crossed the 200, and it's going to happen. I think it looks like it's going to happen within a week or two. So, I mean, in that sense, this has never happened before. So that is something to consider.
Well, there you go. How about this one? I think this would come back to what we were talking about before, as far as the validators. Do you think institutional investors care about a lack of decentralization in ETH validators? I'll just take this one first. If I don't think anybody, let me phrase that. It's amazing how people forget about decentralization when there's gains involved. If everybody cared about decentralization, I don't think Binance Coin would be a top 5 coin. And I'll leave it at that. What do we got here?
You're dead right, Rob. Institutional investors care about alpha. Many probably don't even know what decentralization is or a Nakamoto coefficient is. So I think you said it right.
I don't like to say that, but it's just the truth, unfortunately. Bert says, I'm going to rewind that Ben equation and try to relax to my wife to relate to sound smart. It's pretty funny. Let's see. This time it's different because we are at the end of the fiat cycle. Again, I don't think that we're ever going to, or we're not going to get off the dollar anytime soon. I know a lot of the gold bugs will tell you that. And a lot of people in crypto will tell you that. I just don't think it's going to happen next year. All fiat collapses, right? Throughout history. I don't think we're going to have this at any time soon.
And it won't actually collapse. It'll just be heavily reset.
Sure.
And more controlled. So people will have money, but they'll be forced to do things with it that are against their will, like spend it, and even spend certain assets.
I think they'll eventually pivot. Like I do think they'll turn the printers on again. I just think we're further away from that than people think.
Well, they just issued technically $1 trillion between the IRA and the loan forgiveness program. So that's $1 trillion. So the printer hasn't been turned off. Where's that money going to come from?
That's why my shirt, right? What's a few trillion a month?
That's a good shirt. I got to tell you. Hey, here's one. On my show, I don't like to always just do questions, but comments that are a little bit on the fringe, on the outside. Bankluna Classic. These YouTubers push Bitcoin so hard because they are trapped. So, gentlemen, are we trapped in Bitcoin?
No, most of my assets, if you look at my portfolio, it would be mostly real estate and Tesla. But Bitcoin is a fascinating topic because it's a hard asset and it gives people a chance to get ahead because it's so finite and so scarce. And it's worth a fling. I was preaching to people back in 2017. Everybody I knew with kids, I said, hey, buy 1 Bitcoin per child, $3,000. It may go nowhere, but in 10 years or 15 years, it could really be worth something. Give it a whirl. That's what's fascinating about Bitcoin. And it's completely decentralized. And it is the truest hard money, if you ask me. That's what's fascinating about it. And once the adoption comes, if Metcalfe's law exists or is real and things continue the way they are, it'll be fantastic to watch over the next 5 to 8 years. That's what has me excited.
Well, that's what some of the big, like the Paul Tudor Jones will talk about. Like, hey, and Ray Dalio, like, don't put everything into Bitcoin, but just get exposed to it. And Ben, I think for you, you're pretty heavy cash right now, right?
Yeah, I'm pretty heavy cash, and most of what I have in crypto is just in Bitcoin. And I mean, I think that's where you want to be if you're in crypto right now. I mean, I've been saying it a long time, but we'll see. We'll see where things resolve themselves over the next few months. But yeah, I think cash is king right now. I don't think Bitcoin is king. Like how often have you heard me say like that Bitcoin is where you want to put everything in a bear market? No, cash is king in a bear market. Bitcoin is king in a bull market. And I mean, Bitcoin is king in the sense of like it leads the crypto asset class. Like, so like if Bitcoin is in a bear market, the rest of the market, the rest of the crypto asset class is in a bear market. Bitcoin's in a bull market, the rest of the asset class is in a bull market. But it's certainly not. I think cash remains king right now.
Yeah, and I'm pretty much resetting. I'm heavy real estate and land right now because it's like one of those things that first of all, it's a tax deduction, which is nice. Second of all, it can be an appreciating asset. And then third of all, no matter which way the economy goes, if people want to do short-term rentals because they're vacationing, fine. If they want to do long-term rentals because they got kicked out of their house, because they got evicted, fine. For me, people are always going to need a place to stay. So that's why I like real estate a little bit better than crypto right now, definitely.
Mm-hmm. And then one other thing as well, per that question regarding Bitcoin, so the way, in full disclosure, the way my stuff is geared right now, you've got to remember if Bitcoin does a 3x, Ethereum might do a 5x, and things like Solana might do an 8x. So structure, the further you go out the risk curve, of course, it's more risk, but there's also more return. So keep that in mind for this next bull run, whether it hits sometime in 2023 or early 2024. But it'll be fun to watch. And we just need to get to the other side, everybody. That's the message here. And don't have all your eggs in one basket, of course.
Yeah, that's a video for another time as we get to the bullish ones about allocation and diversification. And just real quick, shout out to Jarky Bridgerson, nailed it. Always giving away memberships to the YouTube channel. For some reason, I don't know, I keep having this on. It's like $2 for YouTube. They do some kind of membership. You get absolutely nothing for it, but it's just a little sticker that you get. So Jarky,
I didn't even know they had memberships on YouTube.
They do. I set it up a long time ago, and then I just never turned it off. Now here we are. So don't worry. You don't have to have a membership to my channel or my website. They're both free. But Jarky,
you could have one.
You could, yes, exactly. You could. I could do this if I wasn't so damn lazy. But yeah, that's what it comes down to. Membership. Thank you. I appreciate it. Oh, this is a good one. Another one from Jingo Chow. The unemployment will probably rise to 6 to 7%. Now, here's a question. Why, and I think this is going to be one of the last ones. We got to get out of here. Why has unemployment been so stubborn? Is it because people are just doing gigs? Are they doing part-time? But it seems like it doesn't really go up. But anyhow, employment probably will rise to 6 or 7%, and price stability hasn't gone down much at 2%, 5% is reasonable. Will the Fed put depression to kill inflation or pivot? That's a good question. Ben, let me start with you because Ben's got the...
I think it's a lagging indicator is the issue, is one of the issues. Like I think unemployment's a lagging indicator. And then also it's sort of manipulated to some degree, or maybe the definition of it isn't always the best because sometimes it might seem low for for reasons like some people just aren't looking for work. But
Yeah.
it can go up quickly if people are really feel the tough times because of what the Fed's doing. It can go up quickly once they decide they have to go back to work. Or think about people who have retired who maybe thought they were going to live off something, right? Some of their retirement, and now, and maybe in order to make ends meet, they feel like they have to get a job again just because everything has just gone down recently. And then also, I think one of the reasons it's been so low is, or one of the reasons why like the jobs reports haven't been as bad is because some people have been getting multiple jobs, which I think also makes up part of it. But I think that's the thing. Like once unemployment really starts to go up, then there's going to be a hope of the Fed pivot. And that's why I keep saying like the once the recession is probably about 2/3 of the way over, that's usually when I think the stock market bottoms. By the way, unemployment, usually I think the stock market bottoms well before unemployment peaks.
Correct.
Because they're pricing it in, I believe, ahead of that. So
yeah,
it almost seems like almost too obvious at some point, and sometimes I'm like, what am I missing if it seems like too obvious? But that's my base case, is that unemployment needs to go up for a while. The Fed will pivot, but they're not going to pivot this year. They'll probably pivot, maybe sometime next year.
Yeah, so the problem with the jobs numbers as well, multiple fold. Ben, you hit on a couple. One, some people have 2 or even 3 jobs. Sometimes they work 6 hours a week, 8 hours a week, and that's considered a full-time job, and that's a problem. In addition, they say about 9 million people will be off payroll because they were doing summertime gigs. Jobs. So that's going to change when they see the September numbers, and a whole bunch more. It's all contrived. They say, oh, inflation is 0%, like the president actually said that, and they say all-time record job growth. It's like, come on, like if they were all $100,000 a year white collar jobs, fair enough, but they're minimum wage jobs, 2, 4, 8, 10, 15 hours a week, and some people have multiple jobs and then doing Uber on the side and everything else. That's the problem. So again, you can't believe any of the government numbers, including CPI.
Yeah, unfortunately, that is the truth. All right. Well, guys, we're coming up on almost an hour here. So I just want to say thanks again for stopping in and dropping some pretty good information here. Again, everybody, if you want to look for James and Ben, you probably are subscribed to them because there's always overlap. But links are in the description, also for the Patreon and for into the cryptoverse.com website. And that's it for today. So, guys, I think we're done unless we missed something.
Nope.
Let's do it. All right.
In the pool, right?
I'm going to jump in the pool right after we end the broadcast, but only for James and Ben. And then later on, when we hit 100K, I'll do it. All right, guys. Thanks so much for stopping by. I appreciate it. We'll see you guys on the next one. Adios.
Bye.